Good afternoon, good evening, students. I hope you are doing good. Welcome back to the channel. Today, we're back with another lecture concerning history. As you can see, it will be about the crash of stock market and the Great Depression in the United States of America. Okay, before I start, as usual, I invite you to like the Facebook page of this channel in order to be notified whenever I post something new, and also subscribe to my channel if it's not already done. That would encourage me to do more and also help you out during the period of exams. With that being said, we shall start with what is the stock market. We cannot understand the crash of the stock market if we do not know what is the stock market, right? So I have decided to give you some key terms which mean nothing in isolation, okay? When we start explaining the stock market, you will be able to, let's say, define it in your own words. So we have companies, money. Companies want to shine, offering their services in return for money. Profit, share. If a company looks promising, it'll make more profits, and more money is going to be offered by shareholders, between brackets, the opposite in case it doesn't look promising. Great trade or great investment, bad trade or bad investment. And then we have the word investor, okay? Now we take the definition of the dictionary first. So we take things from formal to informal, okay? So the dictionary, says that a stock market is a place where shares of public listed companies are traded. The primary market is where companies float shares to the general public in an initial public offering. Initial public offering. This is what we call the IPO. To raise capital. It's the personal money. Capital is what you have in terms of wealth. Okay? This is a bit complicated when we are taking the definition of a dictionary if we're not already familiar with the word stock market. Now we are going to take the concept of the stock market. This is my own explanation in simple words from, let's say, I have exemplified from our reality. So we are going to omit the technical words in order to make you familiar with the meaning of stock market. Okay? Imagine you have created a company, okay, but you do not have enough money to make it shine or to launch it to the real world. You obviously need money, so you ask people to give you money. But that money isn't just given to you for free. If they give you money, it means they will have a share of your company. And when we say to have a share of your company, it means you are going to become partners. They give you money to make things easier for your company to shine, to launch it to the world of industry, for example. But that amount of money isn't given for free, which means you are going to give them a piece of your company. They will hold on to it and they will make profit from it, and we are going to see what they can do with it as well. Anyways, so to repeat, you need money to make your company shine or to launch it to the real world. You need money, so you ask people to give you that money, but it isn't just given to you for free. If they give you money, it means they will have a share of your company. We have explained what we mean by a share. They are called, those people who give you money and you give them a share of your company, they are called shareholders, okay? They can make profit, which means they can make money from their shares, okay, if your company does well, as they can sell the share to someone else to make easy and quick money. I explain. So let's suppose you have created a company and I am a shareholder. I decided to support you. I think your company is something trustworthy or whatsoever, so I give you an amount of money and you will give me a piece of your company, and if your company is doing well, I will make profit from your share, from my share, because I bought it. As I can make more money if I take your share, the share that I bought, and will sell it to someone else. Okay, so if I have the right to sell it to someone else, and he will make profit from it as I would have made profit, even more profit, when I sold it. So this is how the stock market, let's say, works. So I said money can be made easy and quick if a shareholder decides to sell the share, or he or she can keep it and make profit from it if the company does well. Some shares are cheap, okay? When you are interested to buy a share, for example, you can find some shares um, in a cheap price. This is in case the company is usually new or it doesn't do well. But some shares are expensive. It's the same thing. The company does well and it makes a lot of profit, so the share is expensive. In other words, you can have, for example, $1,000, and you can buy a share which will be sold for $3,000. This is called a good trade, as it can be the other way around. For example, if you have a share that you bought for $3,000, but the company doesn't do well anymore, so you want to sell your share and no one will buy it from with $3,000 because the company doesn't do well. So you will have to reduce the let's say the price. Okay, and this is called a bad trade. So this is the concept of stock market in general. I do not want to go in details with the how prices rise and fall, etc. It's just to show you how the stock market um, works in general, and this way you will understand what do we mean by the crash of the stock market and how it affected the economy of the United States of America and also the Western nations. Now, before we move to the crash of this stock market, we need to understand what happened before 1929. Okay, before 1929 there was a period called the Roaring Twenties. I have already made a video about that, and the characteristics of that period is the economic boom, which means the economy in the United States of America rose, and it was something great for the Americans. They had the availability of money, availability of cash in general, and also the availability of jobs. So life was good during the Roaring Twenties. And we have inventions and technological improvement. It was the age of radio, so the cars were also sold for a cheap price, and it was also a decade of mass consumption and production. So when you have the availability of money, the availability of time, you are going to find a society which consumes a lot, and the fact that this society is consuming a lot, it obliges the industry to produce even more to satisfy their needs or the needs of that given society. And thanks to the stock market and investment in general, many businesses flourished, as well as industry. For example, we have the Ford industry or the Hollywood industry in terms of films and animation in general. Then we have the domination of the Republicans. The Republicans are also known for their laissez-faire policy, okay? With the President Hoover, which we are going to talk about him later on when we are going to talk about the Great Depression. Then we have the social tensions. This is the negative aspect of the Roaring Twenties. With the rise of Nazism, with the rise of fascism in Europe and all, it was translated in the United States of America in a kind of social tensions. We have racism against the blacks. We have nativism to everyone who did not belong to the WASP, white Anglo-Saxon Protestants. It was also the rebirth of the KKK. I have already made videos about this. You can check it in the Roaring Twenties. A video entitled The Roaring Twenties. We have also the prohibition and immigration restrictions. Prohibition when it comes to because the American society of that time became hedonistic, and not only that, they also made some restrictions in terms of immigration. They wanted to reduce the amount of immigrants, so they have passed some acts and they became laws later on. And then we have criminality and bootlegging. In terms of criminality and bootlegging, of course, when you have prohibition, you have bootlegging. So they have prohibited the manufacturing, the sale, or the buy of the selling or the buying of the alcoholic drinks. So you have these criminals, bootleggers. They were doing this against the law, so they were not taxed. So all this is going to play a major role in the outbreak of this Great Depression that we're going to talk about. And then we have the flappers and new amendments. The flappers is related to women. It's like the opposite of the Victorian women. They were like wearing short skirts, drinking, smoking, and everything, dancing. So it was the exact opposite of the Victorian women, which was the women before the Roaring Twenties. And then we have, for the last point, we have the Harlem Renaissance, which is the rebirth of the Afro-American culture, which was translated in a form of jazz and blues, which are believed to be African cries, which is a huge chapter and an interesting one. I advise you to read about that more. Now that we have revised some of the characteristics of the Roaring Twenties, we are going to talk about what happened in 1929. Okay, so in this section we are going to talk about the reasons and the consequences of the stock market crash and the Great Depression. So I have organized them into points, clarified them in simple words. Do not forget, if you have any kind of question concerning this, you can leave them in the comments below, or you can just contact me on the Facebook page or on my personal Facebook profile. Now, what happened in 1929? In the 1920s, economy seemed very strong. This was the Roaring Twenties, like we explained before. Then a crash followed this economic strength. Okay? The first reason of the crash is the failure of the Federal Reserve. The Federal Reserve is the institution which makes regulations of the nation's economy. So it is up to the Federal Reserve to regulate the nation's economy in order to avoid the economic crash. So people were positive. So positivity in the hearts of the American citizens about the market and their trust and faith in the Federal Reserve. So according to the American citizens, nothing bad will ever happen concerning economy. So we can just go and invest in the stock market. So they have this kind of trust and faith in the Federal Reserve, and this made them believe that an economic crash is likely impossible. So many put their money in the market, like I said. And then in the late 1920s, we have the overproduction of wheat which resulted in the decline of the prices of that industry. So the production of wheat is considered as an industry, and when you have the overproduction, so you want to sell them quickly, therefore the prices are going to go down, or they're going to fall or decrease. So not only in the industry of wheat, but there was a surplus in the other industries. Okay, so it wasn't only in agriculture. This resulted in a loss of confidence in the market. Okay, and then we have the failure of the banking system. Okay, which is mostly about the fact that banks gave loans to people which couldn't be paid back. Okay, this is why they had what we call bankruptcy. So during the age of the Roaring, or during the decade of the Roaring Twenties, banks were giving loans to the American citizens in order to help them get their personal needs, and then they will pay them back. But with the crash of the stock market, with the decrease of the prices, these people couldn't pay back their debts to the banks, because not only they took loans from the banks to buy their personal needs, but they also took loans in order to invest in the stock market, then pay back the banks. But when the prices went down, they couldn't afford to pay back their debts to the banks. This is why the banks had what we call the bankruptcy. And then you have also another reason, which is illegal activities by criminals, generally untaxed. So when you have this illegal activity, which is not taxed, so it's illegal, so it cannot be taxed by the government, led to this crash. And of course, the best example that we can take is the bootlegging. Then when the prices started to fall, the stockholders sold their stocks because they were afraid they were scared from the fact that these prices can even go um, further down. So they wanted to sell their stocks as soon as possible. Then we have what we call the Black Thursday. Okay, the Black Thursday. It's when the prices of stocks began to fall. And then next Tuesday is also called in October 1929 is called the Black Tuesday. Stockholders started to panic and many stocks were sold at a very low price. This is what led to the loss of many millions of dollars. And people, when you have this kind of let's say panic, this kind of loss of faith in your own economy, people did not want to spend money anymore, okay, because they do not have faith in their economy. And it was the beginning of the Great Depression. And then you have suicide rates increased a lot, and employers, those who employ the workers in general, lost their money. Therefore, they cannot pay the workers. It results in a small salary, and most of the times, many workers lost their jobs. This is what we call the 25% unemployment rate. It was the highest unemployment rate in the history of the United States of America. Poverty emerged, and President Hoover, who is a Republican, like I said in the video of the Roaring Twenties, he couldn't actually solve this problem. Many poor people, the homelessness, people couldn't afford to buy homes, and also they were building these let's say small settlements that we call Hoovervilles, and they were illegal, of course, because they were not chartered. They did not have the right to build houses outside those towns, and they were called Hoovervilles. The people who built these Hoovervilles were mostly confronted with the police in general, and then we have the 1932 elections. So the 1932 elections is basically related to Franklin Delano Roosevelt. He's the one who won the election, and he wanted to have a different approach to solve the problems of the Great Depression, such as the federal aids for the people, but it didn't help. There was what we call the New Deal, which is related to banking reforms in order to get back the trust of the people to the banks. Then we have the repeal of prohibition, but he gave only temporary jobs, no full-time jobs, and many farmers lost their lands due to windstorms. And in 1935, people found out that the New Deal wasn't the best option. There was a second New Deal, which is related to the Social Security. He taxed or the taxes increased for the wealthy and not for the poor people, but it was even worse by 1937. So both deals did not work. So to sum up with the election of Roosevelt, he started with the federal aids. He gave some aids for the people, but it didn't work. And also he introduced what we call the New Deal, which is related to the banking reforms, but it didn't work as well. It helped, but it wasn't a final solution, and people wanted the final solution. By 1935, the New Deal wasn't the best option, although he gave some temporary jobs, and he repealed prohibition, so taxes started to work again, but it wasn't the final solution. And in 1937, the second New Deal was not also the best option to choose, although there was some social security to protect the wealth of the people. He taxed the wealthy, and it didn't work as well. So the economy wasn't repaired fully. The only thing that ended the Great Depression was World War II, or the Second World War. It was the age of manufacturing during the war and consumerism after the war. So this is how the Great Depression ended, and it was the beginning of the Second World War in 1939, more precisely, with the rise of Nazism and the election of Hitler in Germany. So many things started to change, and it was the war which, let's say, stopped the Great Depression in the Western nations and the United States of America. And the world started recovering after that, but they have entered the war before starting to recover, and so on and so forth. So guys, if you have understood the lecture, I hope you have understood the lecture. If you have questions, feel free to ask me in the comments below. Otherwise, contact me if you want. And I tell you, see you in the next video. Peace.